Hi, good morning, everyone. Thank you so much for being here with us today, this morning. I know this is Sunday morning, uh, and it's rest day probably, but we really appreciate you being here with us today. So we have a very exciting session filled with valuable insights and opportunities in the world of fintech. So before moving on to that part, I'd like to briefly talk about FINYE first. Who are we? So FINYE, the full form of FINYE is Federation of International Nepalese Youth Entrepreneurs. It's a global organization in 8 different countries worldwide with a strong network of Nepalese entrepreneurs and professionals. So we are a Hong Kong chapter. To name a few cities, we are also in Australia, Japan, UK, US, Middle East, to name a few. So we are a growing organization, and we Hong Kong FinTech was started in 2021. So we already have more than 80 members till date. So we are on a mission to foster and support youth entrepreneurship and also professionals in Hong Kong and beyond. So this is a FinTech Coffee Talk series is a new initiative by FinTech Hong Kong, and this is the first ever event that we have organized. So the main purpose and the main aim of the Coffee Talk itself is to invite different experts from various fields to share their insights and expertise in their chosen field, so that we can get more valuable insights for our members and also our community. So yeah, our aim is to organize the coffee talk every last Sunday of every month. So this is just the start, right? So to get more updates, please do follow our social channels on Facebook and Instagram if you haven't. So so let's dive into this. So we have a very special guest today on Coffee Talk. So we have Mr. Syed Musheer Ahmed. So he's a founder and MD of Finstep Asia. To give you a background about him, he is also a board member and also a co-founder of FinTech Association of Hong Kong, and he has a uh, over a decade of experience, 2 decades in financial service and fintech, and he has been actively engaged in fintech and Web3 in Hong Kong and across Asia. This includes being co-founder and inaugural GM of FinTech Association of Hong Kong. He has also worked for major financial institutions, fintech, and regulators in the region, including recently with Virtual Asset Regulatory Authority of Dubai. And Mr. Ahmed has also given numerous visiting lectures in across the region, 50 plus lectures, and also he's a visiting lecturer at the HQ MBA Business School. So today he will be sharing more about what are the opportunities, what are the market insights and career opportunities in the world of fintech. So we are really honored to have you here with us, and we can't wait to see what you have to say with us. So I'll hand over the rest to Mr. Ahmed.
Thank you, Suresh. Thank you to Mr. Dahal and Finate for having me here. A big delight to be here. Been part of the fintech ecosystem for almost 8 years now, and been almost 10 years in Hong Kong. Came to do my MBA with University of Hong Kong and State. I love the city. I think one of the things that makes Hong Kong such a dynamic city is entrepreneurs, right? Who have driven the city over time, and the ability and the desire to learn new things, right? And it's great to see this community come together to understand newer trends, but also to see how they can be incorporated. What I'm going to do is it's I don't want this to be a lecture. I would prefer this to be a discussion. So if you have any questions during the presentation, feel free to ask me. I want to keep a decent amount of time for Q&A and discussion towards the end. I will run through an overview of fintech in a broader industry, but also looking at Hong Kong and Greater Bay Area, and also touch specifically around how the job market roles and careers have evolved in fintech and what they are today, right? But before I start off, I want to ask, anybody feel free to answer this question. What does fintech mean to you? You all obviously come here to listen about the industry, but when you hear the term fintech, what strikes you at first go? Anybody? Finance or Binance? Binance, okay, sure. We all love and hear about Web3 and crypto, and Binance being one of the largest in the industry. What else? When you hear the term fintech, digitization, okay. Anything else? Financial technology, cut short into fintech. But what does that mean? What does financial technology mean? Decentralization, okay. Okay, now you're getting technical on that side of things. Okay, so decentralization. What else?
Probably the freedom to do finance anytime from any part of the world without the geographical.
Okay, so the ability to go cross-border and be able to do it 24/7, right? That's a lot of what Web3 does, but also, as I was telling Suresh before we started, for me, crypto and large parts of Web3 servicing financial services is an extension of fintech, and I'll touch upon that. So when we think about finance and fintech and everything else, one of the key things to kind of think about the evolution has to do with the evolution of money itself, right? So, or let me rephrase that, an inherent element of how humans engage with each other, right? So if you were to think back, right, what do you think how was the first financial transaction conducted between human beings? What was the means? Forget what it was for, but how did they conduct it? In human history, right? This is not Discovery Channel or Nat Geo, but I'm just trying to make you think about how that happened, and I'll come back to where we are today on that, right? So how do you think it's all started? Like transactions, let's forget financial. Transactions, right? What was transactions? Yeah. Yeah. Perfect, like multiple of you have answered, and it's a great answer, and which is very true. But when you look at the barter system, what is the barter system? Right? It's a subjective system where people are exchanging value, right? A cup of water, or let's go more old time, and I love using this because we're also in a restaurant. Is assume you are in an island somewhere. There are animals. There's no gold. There's no metals, etc. Right? Now, how are you going to do a barter system? You may have the farmer having a marriage of his child, right? And he needs to buy chicken and maybe lamb or whatever from another farmer. This is, say, a wheat farmer, right? So now when they go to discuss about needing X number of, say, 100 chicken, the chicken farmer will have a certain value he'll attribute to 100 sacks of rice, right? So they'll be, okay, for one chicken is going to be one bag of rice. Now that's a value that's determined between two people, right? Now, if the chicken farmer is aware there's going to be a wedding, right? Then it means there's more need for it. There's a desire. It's not regular food. Then he may increase the price of this, right? So it was about relative value, right? That people have attributed. And then the world evolved from being a value of exchanging of goods between two people or two sets of people or a broader in a smaller community, right? A value of a chicken in a farm or a region where there are a lot of chickens is negligible as compared to value of a chicken in an island where there are no or very little chicken, right? Because then it's more a rare commodity, right? So the value would vary depending on how easily available things are. But you do not have the same value everywhere. And that's when people started looking at the ledger system in terms of trying to record transactions. When I do a barter, you may not do it at the same time. You may take and you may return at a later time with something else. So ledger systems came into being, and you then evolved to having a reference. And that's where things like metals came into being. Initially, the Bronze Age, but then you moved on to gold, right? The value of, say, a bag of rice, if it's one gold coin, right? Across the world, you could reference that. I could take one gold coin and go everywhere, and now I'm able to buy a bag of rice. I don't need chicken, I don't need anything else. I have a reference point, right? And things started moving that way. In the early 1900s, you had, so does anyone know what the term dollar actually refers to? Dollar, right? Like Hong Kong dollar, but specifically the US dollar, what does that refer to? It's a name of a currency, but it's actually a technical term. Does anyone know what it is? Broadly? No. So, some of you may have, I remember this from growing up, my sisters and my mom or my aunts, etc., would talk about a dollar, and I was wondering what it was. A dollar was a small value of like a gold coin, right? So a dollar actually represented a value in gold, right? So you had what was known as the gold standard or the gold system, which was the reference point for rest of the world, right? So if I was United States of America, I could only issue the number of dollars that are equal to the amount of gold I own. So if I own 100 tons of gold and the value of 1 ton is say $10, I can only issue $1,000, right? It's much more, but I'm giving an example, right? And then the gold standard remained for many years, and it was easy for rest of the world to say, okay, it's representing gold for me, right? The paper came in, but it's representing gold for me. Why am I talking about all this is because it all links back to technology and about asserting value and how we look at Bitcoin as an example, right? And why people look at Bitcoin, it's also about value. So in 1971, they stopped the gold standard. It's called the Bretton Woods Agreement in the US and across, after which you could print as much dollars as you want without proving about the amount of gold you have. It now became back to being relative value, where you said, okay, I trust you have that much money, and I'll attribute a value to the US dollar, right? Things evolved, and now we reached a stage in 2008, 2009, where the world was very disenchanted, that a lot of the money, the banks, etc., had gone down, but the biggest impact happened with the local people, right? And you had intermediaries making money. So they wanted something which was independent of governments, and that's how Bitcoin came into being, where again, one of the early examples people give, it's been 11 years or something, it's called a Bitcoin Pizza Day, right? Where somebody bought one pizza for hundreds of Bitcoin, and now that would be worth millions of dollars, right? The reason being, at that time, that was the value somebody attributed to one Bitcoin or 100 Bitcoins. Now it is $50,000. At that time, it was less than $1 each, right? So it all is relative value in terms of how you see things being brought up. So the evolution of finance, when we talk about, started with barter systems, moved on to subjective ledgers. Then you had fiat money, which the Chinese, in some senses, invented paper money, where they said, here's a representation. Can you carry thousands of gold coins without getting attacked, without the risk of it? It's not easy, it's not fungible. So you carried paper, it's easy to go across. It's a representative value. That physical representation then became a digital representation when computers came about, right? So vast majority of transaction in value are done digitally today, right? Very few people are transferring $1 million in cash everywhere, right? Or taking around. In fact, it's almost impossible outside of free trade centers such as Hong Kong and a few others for you to be able to carry that much cash, right? Bank accounts, banks will not accept it. You'll have to do digital because they want to trace it. So that's where the evolutions happen. And for me, FinTech is a bunch of different things. And the first example for me with FinTech lies here. But what has been the first? Give me an example of FinTech that you have dealt with. When I say FinTech, and now we've spoken about FinTech is, I'm going back so that you don't look at it. What was the first financial technology application or use case that you have dealt with? ATM? Okay. You saw the Barclays one, but yeah, okay. What else?
I would say digital banks.
Digital banks, okay. More recent, okay. What else? All of you, I'll guarantee you, all of you have used some form or other of fintech, right? So what is your first experience of fintech? Anybody else? So you had ATM, you've had virtual banks, so still on the banking side. What else? Payment systems, but be specific. Pay me, okay. Another, that's 5 years old. Okay. What else? PayPal, okay, about 20 years, 25 years old. Okay. Someone said WeChat. Yeah. Okay. Mobile wallet payment systems, roughly about 15 to 20 years old. Right. What else? How many of you came by public transport today? Vast majority of you? Yeah? What did you use to enter? The octopus, right? The octopus is a very classic example of a financial technology tool you use on a day-to-day basis, but you're not, it's all terminology, right? So if you throw away the terminology, you've been using it. It is the preeminent transport payment system in the world. It was the first one among all others. Oyster in UK, everything else followed what Octopus did. And then you have a lot of stores that accept Octopus, etc. And now they're digitizing Octopus, right? I use it on my phone rather than using the physical copy. But that's an example, right? For me, one of the earliest examples and impact of fintech goes down to my previous, or where the word I started with. So who can recognize what's on the top left? It's not a record player, I'll give you that much. What do you think it is? Sorry? Time clock? No, it's not a clock. I'll give you a hint. A lot of you have this application on your phone. Let's go with that. The one on the top left. The one with the gears and everything. Setting? No. Sound? No, it's not a sound device. Not a recorder. No, currency converter, algorithm. Okay. I gave you a hint. It's something on your phone that a lot of people use today. No, it's an application. Not Microsoft. Time machine. No, it's not a typing system either. Actually, it is. Somebody said? It's a telegram, right? It's a telegram. Okay, it's one of the first telegrams, and you can. There's a little of right there, but you can, if somebody's close enough, you can read. It says telegram there, right? But what does a telegram have to do with financial services? This is 1850, roughly. Yeah. No authentication of transaction, honestly, seriously. There wasn't any time stamping, and authentication are seals that are existed for hundreds of years, if not centuries, right? And we are in a world where we still use these seals. If you go to even TST or outside Central Station, you have the seal, right? That's culture. It's not authentication. It's a messaging device, right? Telegram is a messaging device. But again, why Telegram? In the in the 1800s, the stock markets and the commodity markets had picked up significantly, internationally, in fact, as well, right? But the need to have information immediately or as soon as possible was very important, not just today. We all think we all need news, what happened overnight, as soon as we wake up on the phones. People always have the need to know what happened, right? Immediately, as soon as possible. The telegram was that way to talk about, send details between New York and Chicago, and later on New York and London, to talk about the stock markets and the commodity markets, right? That was one of the first fintech applications. So coming back to the definition, I know I've stretched it a little longer, but my whole idea is to get you to understand the concept, right? It's all terminologies. It's technology for the use of financial services, right? And then the history therein becomes, on the right-hand side is the first computer, where there are a lot of computer applications in terms of supercomputers. In the middle is one of the early online banking services that most of you kind of use now. I mean, I used my HSBC online webpage for the first time last week in over 2 years, right? But a lot of us are doing it on our phones now, right? So it's current. On the bottom right is the CME Group's trading system. So wealth management and trading have been one of the leaders when it came to use of technology in financial services. You talk a lot about AI in today's world, right? Everybody's like AI, big, massive, NVIDIA, etc. You've had companies, including Millennial Capital, who were using AI in the 1980s for trading markets to get that edge. So it's nothing that new. It's 30 years old in terms of proper financial service applications. And on the left, which a lot of people actually use as an example, which you also mentioned, which is the ATM. That's the Barclays Cash ATM, which was launched in 1967, if my memory serves correctly, right? So then came an event in 2008 which changed the world as we see it in many different ways, right? There are two events that happened very close to each other. On the left is the news announcement when Lehman Brothers, which is one of the top 5 investment banks in the world, very deeply connected in the financial services world, collapsed. I was trading at the time, it was chaos, right? And that's the news. Lehman collapsed since it was the biggest financial crisis since the depressions of the 1920s and 30s, or 1930s rather. And on the right is the launch of the first iPhone, right? I think yesterday was Steve Jobs' birth anniversary, and so maybe it's pertinent to look at it at that timing. But what is the connection between the two? Anybody? What do you think is the connection between the two? It's coincidental. Okay, let me put it that way. It's coincidental, but what is the important connection you see between the two? And this kind of tells you, as entrepreneurs, when you're evaluating incidents and events, how they can be connected, right? And to actually give you there's been a similar correlation that happened over COVID, right? For almost the same result. But phase 1 was this, but for different reasons. But what happened here?
Probably shift in how world is now making money. So probably with more financial services and now probably moving to tech.
It's a good way of looking at things of how the world is making money. But to be honest, I wouldn't say, yes, the tech stocks are the leading stocks, but they aren't necessarily what the world is making money on, right? It's how they are making money, at least, right? Or the world is consuming. But there is the consumption element, correct, right? There is a lot more consumption that's taking place in through technology. But why is it related to the Lehman collapse? So some of you probably were quite young toddlers at the time, potentially, right? So you may not remember. Some of you are closer to my age, possibly, and may remember this, right? So one of the things that happened was, even though it was an investment bank, which services institutions rather than the retail market like an HSBC or a Hang Seng, the key element that happened was, because they were so interconnected, a lot of banks across the world collapsed, right? So the financial system significantly collapsed, and many banks had to be bailed out, which is they had to get support from the government, including the likes of Citibank, right? Whose stock was on the brink of going close to $0. I think $2 per stock, if I remember, at its lowest. So, and then the iPhone came about. What did the iPhone bring to you? Sorry? Apps, right? But what about the apps? Access to information, yes, but not necessarily to do with financial services. One of the things that iPhone brought to you was the ability to do multiple activities on the move, right? So you literally had a computer in your hand, right? I think iPhone 3 or iPhone 4 has the same amount of computing power as NASA put into sending the rocket to the moon, right? So if you think about the ability to do things, and now our present iPhones, Samsungs, etc., their computing power is off the charts, right? You can do so much with it. And that's one of the reasons NVIDIA has gone from being a few $100 billion to close to $2 trillion. For those who are not following it, NVIDIA is the hottest company in the world right now. They are essentially into semiconductors, right? And that whole demand is about computing power, right? Also, this whole presentation is no investment advice. right? This is for educational purposes and reference purposes only. Please do your due diligence in any investments that you take. So that was a reference in terms of NVIDIA. But what happened is because you now had you had a computer in your hand, you could do online transactions, you could do online payment, you could do multiple things. You can use Apple Pay, right? One of the earlier applications of fintech that had real impact was this company known as M-Pesa. Right? Have anybody heard of M-Pesa? Right? Sounds familiar. It sounds like Pesa. So, like Indian rupee and Nepali rupee, right? M-Pesa is PSA, is a Kenyan company, Mobile Pesa, right? They were among the first ones to use mobile phone technology for payments, in particular remittance. So in Africa, 20 years ago, 25 years ago, it was very challenging, and Africa is massive, right? Just North Africa is as large as the whole of Europe, right? In scales and width, etc. So transferring money even in countries, etc., was difficult because it was challenging from an infrastructure perspective. It was also very expensive, right? And in some cases wasn't very safe if you want to transfer big money. So M-Pesa came in as a mobile app where you went into a mobile vendor or top-up place and say, here's $20, please transfer this to my friend or my family member if you're in Nairobi, in another city in Kenya, and they would do it, and then the money would be received as a SMS on the phone, and then you go and you collect it from another vendor, right? A bit like how Western Union functions internationally when you go into remittance, right? But there you're not using any mobile phone. Side note, Western Union has a very good remittance app that I use as well, right? I've been using for multiple years. Again, not selling a product, it's just something, it's one of the world's largest firms, but this is something that people don't know about, right? So when you look at Western Union, your first thing is money remittance, go in person, high fees, right? I use the Western Union app. I can pay through my credit card or my bank account, right, from Hong Kong. It's instantaneous to remit to my Indian account or to my mother's Indian account. And the fees is very low, 15 to 30 Hong Kong dollars for even transfers up to 10,000 Hong Kong dollars, right? Now, I'm not selling the product. Western Union isn't selling the product much either. I got to know it because I was talking to some people in the digital field, but it's an app. It is very, very popular and can be very cheap, but people don't see the applications necessarily of that, right? So coming back, so remittance was a big play. Why mobile phones was a big element is when the banks got hit so badly and many banks crashed, HSBC, for example, shrunk 40-50% over last 15 years, even more in terms of number of branches. A lot of global banks shrunk. So it became a case of, I just need to survive. And that's why I said about COVID was a similar element. People were like, I just need to survive. I'm not going to be putting money into anything else. I'm going to put into money for just maintaining my operations. I'm not going to upgrade. So when you had COVID, a lot of us were not going in upgrading our electronics, our housing goods, etc., unless it was a necessity. Correct? You just said, hey, I don't have the money. I don't know what's happening in the future. I just need to survive. And with businesses, we do the same, right? We're like, okay, this is good. Let me just polish this or paint this up rather than, doing the whole change and buying a new thing. Because it's more effective. It does this purpose. At the same time, because you had the iPhone come out, you started seeing more smartphones coming in. So technology providers started providing more services, in particular payment services. So Alipay came into picture, WeChat Pay. WeChat Pay followed Alipay, by the way, right? But that was more of necessity. And then the world changed and the banks had not caught up. So there was a technology gradient or differential that happened where the banks were doing well, they're not doing well, and the tech firms were eating away the market share. Right? So in our businesses, we see the same thing. When you're doing something and if you're not investing, somebody else will take away the market share because they may be more innovative, right? So even if you look at apps, a lot of bubble tea shops in Hong Kong operate using apps. So it's quicker for you to go and pick up, right? Even McDonald's delivery with apps for pickup, they're giving you more incentives than if you're probably ordering in person, as an example. So this is an element of how technology impacts businesses and how it impacted financial services. Banks are catching up. I'll touch on it very briefly soon. But that's another understanding of how financial services have evolved and how fintech now, in a sense, is part of our lives. Each of you are using either Octopus or plus other apps, PayMe, WeChat Pay, could be anything else, your HSBC, Hang Seng bank accounts, PayPal, and other elements, Binance, all of these to conduct financial services, right? So looking at the value and how technologies evolved, we can now see how slightly uncorrelated events have the big impact, right? And I'll touch upon how COVID also changed things for that, right? So here's just a broader element of looking at different segments where fintech caters to, ranging from lending, right? Lending apps are very common, very massive in China over the 2010s. You then have personal finance, payments. Payments are the biggest sector as it is. And then you have remittance, virtual banking, and other things. RegTech is more use of technology for regulatory and compliance, right? So when you are signing up to any payment or banking app, they ask for documentation, what is known as KYC, right? Know your customer details. Earlier, you had to physically go give a copy of your passport or HKID and other details. Then they would verify it. You give a Xerox copy or whatever, right? In today's world, you don't do anything of that, right? You just open your phone, scan your ID. They have technology at the back end that evaluates whether this is authentic or not. And then some apps have you shaking your head and nodding your, opening your mouth and closing. It feels like an exercise for speaking contest. But largely speaking, those are KYC tools that are being used, and that's what's called RegTech, right? And cryptocurrencies, in my view, are an extension of fintech because they are used for financial services and are a technology that is using that, right? Very briefly, I'm going to touch upon blockchain. It's a technology, right? And a lot of us don't need to even know what it does or how it's used, right? Very few of us, including those who are in the tech world, understand how websites work, right? When you type in an address, what is that? When you write some name, how is that working? You just type google.com or whatever, right? scmp.com, you're just going somewhere. But there's a whole code behind it. And same with blockchain. It's a technology that enables sharing of information simultaneously among multiple people, right? Some of you may have used Google Sheets. So if you look at Excel sheet, right? Typically when you had an Excel sheet, only one person can work at it at one time, right? You finish, then you send it to somebody else, then they work on it, and then they send it back to you, so forth. When Google Sheets started, they said, hey, why don't you share this simultaneously with everybody in your team so they can all look at it at the same time and you can possibly work at it together. You had features in Google Sheets where you could choose what actions people could do. Can people edit? Can people view? Right? So you had those options. Blockchain is similar. That's where things like smart contract come in, where you can give access to people to just view the information or authenticate the information or add to the information. One key difference with an Excel, what is an Excel sheet? It's a ledger, right? It's a record of data. And that's where you go back to multiple ledgers and coming back to duplication of ledgers. When you have different Excel sheets, you don't know which is necessarily the right one and the authentic one. So when you're having the same Excel sheet and all the people connected to it are seeing it, you are then like, okay, this is the data. And with blockchain, you can't go back and edit any of the information. In Excel, you can go and edit, and then it changes all the lines below, right? Formulas, etc. But in blockchain, you cannot do that. You'll have to cancel it. So then you can track any changes and who's done the changes as such, right? So that's why there's an attraction for blockchain, because people are like, I can check who's doing what. It's transparent. It is, in terms of, most people say tamper-proof in some senses, because to hack into it and break it, you need a lot of computing power and effort, and a lot of people have to work together. And it is distributed, right? Everybody is able to capture it, and it's, some say decentralized, but not necessarily. Not all blockchains are decentralized, meaning it's not like everybody, no one's got control. Some blockchains, people have control. In certain blockchains, nobody has control because some rules are set, and then everybody can come and use it. Okay. So here's just broadly applications of fintech in the sense of you have digital transformation, front office, back office. You have the big tech firms where people are working as well on financial services. All of them there have some form of the other of financial services, right? Which one among these is the one that you find most surprising when it comes to financial services? of the big technology firms? Facebook? Yeah? Do you know Facebook has 50 plus banking licenses in the US? Right? A lot of people use the Facebook marketplace to buy and sell things. It's connected to something else. But interestingly enough, one of the biggest reasons that in modern world you have this thing called the central bank digital currencies, which is nothing but your Hong Kong dollar on a blockchain or a digital blockchain, came up because Facebook in 2018, 2019 launched a project called Libra, right? Which was meant to be a single coin representing multiple coins, right? So Hong Kong dollar is pegged against the US dollar, right? So it's 1:1. So it's fine. In the sense of one currency to one currency. Right? In Singapore, it's pegged to a basket of currencies. What does that mean? It's about 5 or 6 different currencies, the value of which cumulatively equals 1 Singapore dollar or vice versa, right? So to maintain their peg, they use multiple currencies. Libra was a basket of currencies again, global currencies, about 20. But then because Facebook has 2 billion plus users globally, it would then mean central banks have no control over transactions and all of this, which can be a concern given money laundering issues globally, right? But otherwise also on monetary policy. Monetary policy is what rules central banks set, like increasing interest rate, reducing interest rate, looking at inflation, etc. They're able to control it more if it is inside their jurisdiction and the currency that they generate or print, right? If it's not, it becomes challenging. So if it's free for all, it's a private company running the world economy, that becomes very difficult because their aims are very different to what a central bank or a government may have, right? Broadly speaking. Broader players in the fintech ecosystem range from government and regulators who forming the rules and allow things to happen, all the way to adopters and facilitators. One major thing that most people miss, and this applies across different industries but also applies to fintech, is culture, right? Like, what does culture have to do with financial services? Okay, classic example is PayMe, right? Why do most people here use PayMe? So how many of you use PayMe here? Okay, quite a few people. Why do you use PayMe and why don't you use VLab or some other payment tools? If you do, why do you use PayMe?
I think it's because majority of us are used to using HSBC, and that's a subsidiary app provided by HSBC, so it was quite easy for us to shift to PayMe.
Okay.
And then, opening a new account with, like, let's say, VLab or...
It's almost the same time that it takes for opening a new account, but fair point about HSBC. Anybody else? Or broadly same reason? Okay. Okay. Okay, fair. So marketing was strong. And one of the key reasons was this HSBC app, right? So you have trust in HSBC for whatever reason, have been around for a long time. They're a known bank. So my wife's Hong Kong Chinese. I used to do these box opening videos of the debit cards that the virtual banks used to issue in Hong Kong, like Mox Bank and VLab Bank and all the others as initial adopter. So when I was doing the box opening for the Mox Bank card, and then I said, "Oh, Mox by Standard Chartered," my wife went, "Oh, Standard Chartered," right? The reaction was something familiar, something solid, something that I know, right? So it was very cultural in the sense of saying, "I'm very comfortable with a bank." It's almost the opposite in Southeast Asia, in India, in most emerging markets, where banking access is limited and people are very happy to go and try out a Google Pay or a Paytm or anything else, right? So that's a big difference. And in Hong Kong, still happens, but lesser so. If you go to near a bank at 8:45 a.m., you'll see a queue of people standing outside, right? Still in today's world. In a city which has among the highest density of ATMs anywhere in the world, right? PayMe now has 3.5 to 4 million users, which is more than half the population of Hong Kong. Largely because people are culturally happy, trusting. It took a while for people to gain and start using virtual apps because they were not sure of, they didn't have the trust. And if you flip that and contrast that with mainland China, right, where banking was a challenge in terms of accessibility in the country, it became very prevalent that mobile payments was the way, right? Alipay came in not because Alibaba wanted to transform the payment system of the banking world. Alipay, and the lesson from Alipay is it was an enabler. They said, here's my e-commerce store, right? In the good old Amazon days, people were using PayPal. That was an enabler for US, and PayPal people had access to it. Or online banking was fairly okay. In China, it wasn't at that time, right? In 15 years, 20 years ago. So Alipay came in as a method to enable people to buy and purchase goods from Alibaba. That was their aim. So you enable a method, for example, in a restaurant here, right? People take cash, but in a lot of places, you'll also offer card payment or mobile payment. Why? Because you want to enable what the users have, versus you pushing them to do it in a certain way only. Right? That can have an impact on business. And COVID showed that to everybody that if you go digital, people are not coming in, so touchless, right? That was a whole push, and that changed the whole world for you when it came to fintech. So anyway, so that's culturally very different, and it's just similar in every other sense, but you can see as an emerging economy versus a developed, mature economy, there were differences. And this is seen globally, where mature economies where the banking penetration is very high. Most people in Hong Kong, on average, own 2 to 4 credit cards, as an example, are very used to, like a fintech entrepreneur who runs a very large remittance app said this, and it struck me about 6-7 years ago. He was like, the amount of time it takes to remove your phone, open up your phone, go to the app, log in prior to biometric identity, versus removing your wallet, giving your card, is almost the same time, right? It was negligible. I mean, difference was negligible earlier. So people were just like, I'm using my credit card. Now it's different. I just put my phone, I tap, and I go. Because you have the POS enability. So that's going to be important in terms of how you enable your customers based on how the technology is evolved. And that's where the gap has changed. Fintech users, and as I was talking about, we talk about Fintech 0.0 as Murray 2020 calls it, which is when I talked about M-Pesa in the 2000s, right? And the world population was 6 billion at that time. So world population has gone up by over 25% in 20 years. Fintech 1.0, internet users were only 2 billion, right? Which should have been 30% of the world's population. In 2021, the number of internet users are 5 billion, which is closer to about 70%. And I would imagine now it's probably closer to 5.5, 6 billion, right? For example, India's internet users have gone up from about 350 million around 2020 to over 750 million in present day, right? That itself is close to 400 million addition, right? And the global GDP is also quadrupled since 2000, sorry, yeah. I'm just gonna talk about how investable finance assets in US by generation has changed in the sense of who owns most of the money. You can see that there's a big shift happening when it comes to assets, right? A lot of the money is going from baby boomers to millennials and to Gen X and millennials, right? So this transition of wealth is also taking place in Hong Kong and other places, which means you now have people who are comfortable, what can be called digital natives in some senses, those in their 30s and early 40s, who are very comfortable using technology and hence comfortable using technology for managing their money, which then makes it relatively easier to offer wealth management apps and other elements by banks on their services, right? What customers lack from banks, this is a analysis of financial services fund, right? So you see a lot of fintech firms who are trying to be fresh and say we are fun. PayMe plays a lot of gamification. You can see that rewarding, emotional connect. All of these elements are things that people find banking to not be strong, not personalized as well, right? So for me, the future of fintech is on the left. You're talking about tailorized, customized for individuals, right? At a mass scale, but yes, still customized. So what is the secret of Zara being one of the world's largest apparel manufacturers and retailers? Yeah.
What I know is usually they don't spend too much time on their designing process. In fact, they look at their competitors and whatever they release, they make the exact same or better right away within 24 hours and sell it on the market. So that's how they were able to have the market and get
Part of it,
their,
yeah. They are one of the fastest supply chains in the world, right? But how does Zara stay up to trend? The competitor is not necessarily, the M&S of the world aren't necessarily trendsetters. How does Zara figure out what are the new trends and offer the same at a much cheaper cost? So Zara has, as do most stores, have cameras, right, in their stores. They are tracking what people are wearing when they come in, right? To kind of determine what is the changing trend. And then they start looking at designing similar products, right? Now that's tailorized. It's customized, but mass in some senses. You see 50 people wearing a slightly different jacket style, right? Maybe this becomes trendy again. So maybe they'll start following that, right? So that's becoming this tailorized and personalized, but at a mass scale. Right? So you're giving more options, but you're able to also scale it up, right? And the second is a screenshot from the Jetsons and the world. It's a cartoon character animated that existed 30, 40 years ago, talking about how the world would look, right? Flying taxis, all of this world, right? Which is about showing futurism, right? And that is something that we are seeing in today. Dubai is 3-4 years away from launching a flying taxi. If the product is there, it's trial, it'll happen, right? So we are seeing futurism happen today. The next one is the smile to pay and face pay applications that exist in mainland China. Forget carrying a card or mobile phone. You don't need anything now. You just need your face. You go in, it scans your face, you approve it, right? So Alibaba had a very interesting way of using things. And this is why technology players have changed, transformed is they don't approach finance in the same way as banks, which is take the money, give it out to somebody else, make the interest, and we're good, right? That's your typical invest somewhere else, and the bank is making money. Technology players are like, how can I change things? How can I make this more innovative? How can I make it easy for the user? How many of you have heard of Smile to Pay? Nobody's heard of it? Alipay, one of the ways they wanted to ensure that people are not being forced to pay, right? Like if I'm there and somebody's like, make the payment for me, was this option of, and also to make sure of liveliness, as they call it, right? In modern AI checks liveliness, was Smile to Pay. So if you wanted to authenticate a payment and using face recognition, you have to smile when you paid. So it recognizes the movement of muscles, right? And then knows it's live, it's real, and you're probably also willingly paying, right? Now you have the facial counters that are there where you're paying through that. In some of the metros in mainland China, you can use your palm, right? So it scans your palm print, which is almost unique for all individuals to enter your metro. And a small value transaction. So it doesn't matter if somebody fakes it. Like somebody gets your fingerprint and puts in a lot of effort into generating the ID. It's not going to matter for a 5 yuan or a 10 yuan transaction, right? So the risks are very small. So those are the kind of things that are being used. Speed, technology is very important. The bottom left is a depiction of a high-speed cable, right? And that's where semiconductors, everything else is about speed. How quickly can we get things done? Today, even 5G feels slow for some people, right? So that just tells you where we are. Number 5 is decentralized connected world. And the last one is about artificial intelligence, which we started off with using artificial intelligence for RPA, which is repetitive process and automation, to now looking at using AI for understanding customers, understanding data better, so you can make better offers, but also to reduce risk for banks based on looking at transactions and also looking at different models, right? So here's just an example from McKinsey, which looks at traditional banks versus fintech accounts. What are the major differentials? Why people use fintech accounts over banks is they're easier to use, they're more convenient, but when it comes to trust, again, as I showed with HSBC and PayMe, the trust is still with more banks, right? Hence, some of the technology players haven't captured the banking world, but they're largely in the payment world, right? WeChat Pay, Alipay, all of these are payments, not banking and wealth yet. Ali is, but not the others. Yeah. Now coming to impact of COVID, right? You can see how the limits were changed by the central banks due to COVID. The red dot talks about what was the previous limit, and the blue highlight talks about how much changed in terms of how much payment was allowed using contactless, right? For example, your Octopus top-up could only be $3,000 digitally, or PayMe would only allow X amount of money to be paid using your app, right? But that changed after COVID, where the central banks allowed a lot more and more people were using. And fintech adoption doubled between 2015-19 to 2020. In some senses, with e-commerce, with retail sales, you can see it went up 3x between 2019 to end of 2020, right? Because a lot of people are just ordering online. They didn't want to go in person, and that became a habit for people. Fintech valuations also increased significantly globally. I want to talk about what I see as what's happening in the future of fintech. A lot of it is no longer a competition between banks and fintech players. People now look at it as a collaboration where technology players, fintechs bring in better personalized solutions, cutting edge technology, better understanding of customers potentially, and they use the bank's trust, bank's data. Banks have huge amount of data to be able to offer a better service. And importantly is also regulations. Despite the fact that there are newer regulations servicing a bunch of different fintech applications, banks are regulated, and regulations cost a lot of money, right? Hence, some of the fintechs are collaborating rather than spending money on getting regulated. So, fintech unicorns globally, unicorns are companies who have a valuation of $1 billion or more. US obviously leads that, about 168 totally. Asia got 56. This has shrunk. It used to be much more. After 2022, there was a big downsizing and valuation of fintech firms globally. As you can see, US, Europe, and Asia are leading, and you're seeing LATAM and Africa catching up, right? This was what I meant. Funding-wise, money put in by venture capital into fintech peaked in 2021 when COVID happened. Everything was crazy, and we were like, oh, everything's going digital, and huge amount of money went in, record money went in, and then it dropped because now you had to come up with newer models, newer challenges, saturation of number of products that were there, and the economy wasn't doing too well, so a lot of fintech valuations fell significantly, as did the money raised. So, I mean, the lesson from here in some senses is there may be a trendy topic, there will be a peak to it, but be very wary that funding isn't linear in one sense, just going up, right? You may see that with semiconductors now, but that'll peak and start slowing down as more people are chasing faster growth, right? And fintech was offering that at that stage because they were having huge number of new customer acquisitions. You also notice that when you start a new service or a new restaurant or a new location, you'll see new people come in, right? And like number of customers, but there's a level you reach where it starts, the change or the growth rate slows down, right? If you go from 10 to 50, that's a 400% jump. But when you go from 50 to 100, that's only a 100% jump, right? So growth rate starts slowing, and hence the funding that goes in slows because your growth rates may not be as quick. So here's an example. Stripe is the world's most valuable fintech. It's about $50 billion as of Q4, which is a couple of months ago. That used to be over $100 billion, right? Or close to $100 billion in 2021. So you get a sense of these companies that were super big and super high value who have gone down significantly. This I've touched. I'm just gonna... so here's an example of how mobile payments and internet usage, mobile usage varies in developed versus developing market, right? In China, you could see this is 2020, 2021, slightly dated, but you can see that the number of mobile internet users in China are close to 1 billion users, right? And the mobile payments market is about 85% or 90% of them use it. So that's a huge difference as compared to the US, where you have much lesser number of mobile payment users, which is about 92 million. That's about 30% of their population. So in US, checks are still very prevalent. Physical banking is very much still there. Not too many people use digital apps or don't trust them so much. So you do see that significant change in attitude. I am going to just touch upon Hong Kong. Again, this is from Hootsuite and Meltwater talking about use of products. 44% of the market uses technology for banking or insurance. Mobile payments, similar story. and owning of crypto is about 10% of the population, right? So we still have a long way to go, largely also because of the demographics in Hong Kong. Can someone guess what the median age in Hong Kong is? Median age of the population, right? 30? Come on, that's India. And it's one of the youngest in the world. That's a different story. Someone said 50, someone said 40. 50, okay. Anybody in the middle? It's 46 actually. 46. So now imagine, right? That's the median age, which means about 50% of the population is older than 46, which means they're not digital natives, not necessarily comfortable with technology. Hence the queues outside the bank at 8:45 a.m. They're very punctual with their timing as well, right? So that means that's a change in attitude will take a longer time. Similar thing happens in Japan. When you think about Japan, instantly like Sony, right? And it's like technology, AI, robots, all of this. But in reality, digital payments, etc., aren't that massive in Japan because the population is much more older. The median age is probably higher than Hong Kong, as an example. So that's another element, right? Financial inclusion, and this has a big impact in use of technology, right? So Hong Kong's financial inclusion is people with accounts. It's about 98% of people have some bank account or the other. We're talking about anybody who has an HKID can get a bank account in Hong Kong. When you look at Southeast Asia, places like Indonesia and Philippines 3-4 years ago, 75 to 80% of the population had a social media account, probably higher, at Facebook, everybody had. But only 25% to 30% of the population had a bank account, right? So there's this huge gap, and I'm using technology, but I'm not being able to get bank, so I'm going to use an app. So the growth rates would be higher. Similar thing applies in India. India changed in terms of bank ownership through a scheme called Jan Dhan account, which literally translates to people's wealth, where about 50 crore, which is 500 million people, where bank accounts are opened by the government in state-owned banks for farmers and everybody else who needs subsidies. So that changed bank ownership. But activity-wise, it's still going to take time to become. Weekly shopping, 50% of people say they've purchased something online on a weekly basis, which is good. And increasing, and payments used, 44% still use debit cards and credit cards, right, for e-commerce play, whereas 31% use mobile apps. I'm going to skip this and I'm going to come to careers in fintech because I'm very conscious of time. Sorry, it's taken a little longer. Yeah. So this is a report from CFTE. One of the things I would also recommend for any of you who are looking to learn more about fintech industry, there are quite a few free courses or very relatively cheap courses available, or low cost courses available online where you can learn about the industry. One of that is the University of Hong Kong's mass online course, the MOOC that they have, where you can get a certificate as well at the end of it. Online course, you can do it at your own time, at your own convenience. And I think the certificate costs like 500 or 600 Hong Kong dollars at the end of it if you want it, right? Otherwise, you can just do the course as well. And a lot of Udemy and other free courses. CFTE also offers courses on fintech. They're a partner company of us, as are the HKU Fintech. But largely speaking, you can learn more about things from basic fintech to blockchain and other elements online now, right? If you just want to explore it. But here you can see how in many of the different fields, you are seeing the number of fintech employees increasing, and as also the roles with regards to IT increasing. So Goldman Sachs, JP Morgan, right? These are banks. One is the largest bank in the world. One is the top investment bank in the world. They have over 40% of their staff are involved in technology roles. So they're almost more technology than they are banks in some senses, right? Think about 40%. A lot of it is, yes, operational, back-end, etc., but still it's technology-driven. So technology is becoming very massively important in financial services. Over 300,000 fintech employees globally, a huge number of them in the US and also in Asia, where things are being driven now. Career options that you can have when you're looking to enter fintech. Of course, you can work for a bank, as I mentioned. You can work for a big tech firm, big tech being Facebook, Apple Pay as example, WeChat Pay, Alipay, all the others. You could be working in fintech education, which is also opening up. You could work for investors. So venture capitalists, they need persons who understand the industry, can source deals or find startups. That's another work. Working for professional services. I didn't want to write consulting firms because that gives you a different impression, but professional services, ranging from consulting and advisory to technology services firms as well. You could work for a fintech startup. A few years ago, it was very challenging culturally here in Hong Kong. There's a KPMG report that talks about how the younger population, under 22 or whatever, are willing to go work for a startup, like 80-90% of them, whereas the amount of parents that approve is about 25-30%. But I think that's changing. More people are aware of startups, and some startups have IPO'd and done well. So culturally changing, but working for startups is great because you can learn a lot more. You're given a lot more responsibility. You grow faster, and you get this exposure you don't get anywhere else. Right? Or you could run your own startup. Right? Most of you, I mean, given this is an entrepreneurs and youth entrepreneur forum, a lot of you know about running your own businesses, right? And that is a lot of grit, a lot of time spent, a lot of tears, less money in most cases, right? It's the passion that drives you. And you're out there to make a change. One of the things that a lot of people I see in entrepreneurship, or when they think about entrepreneurship, is like, I need to have a very unique product, right? I feel you can only succeed as a unique product, which I feel is not true. They are innovators, don't get me wrong, who are cutting edge and are changing things. But a vast majority of entrepreneurship is about doing what is needed where there's a demand and doing it well. Focusing on doing it well is more important than saying everything needs to be innovative, everything needs to be this thing. Because I believe in incremental innovation rather than having disruption, as a lot of people talk about disruption. Because disruption is not going to help. You can only so much you can do disruption, very disruptive for the businesses. And same thing, it's a restaurant, right? And it's bare bones, we are sitting in a restaurant, right? There are millions and I would say billions of restaurants globally. Why? Right? In this area itself, there'll be so many bars and different restaurants. You have some uniqueness, you're tailored it. You have Indian food, South Asian food, you have a bar, right? You serve different cuisine. That's tailoring, but there's still many. We're sitting right opposite another momo stall opposite, right? So what distinguishes you is smaller things, consistency. If your food is good, people will come. Right? Rather than saying, what can I make it so innovative, so different, then it becomes a niche market. So you've got to be aware that entrepreneurship is tough, but it's about consistency. That's why you see hundreds of payment apps. They're all offering the same thing, not much different, because there is demand. So but whom can you reach? Through the marketing, right? That becomes a very important element of how you target and how do you incentivize. This is again similar to what we spoke about, but this is more technology roles that exist internally. You can be what's called product managers, where you're building a product and giving inputs. Graphic design, UI UX is interface. Then you have engineers, which are prevalent across. You do then have data scientists. This is one of the hottest role right now, given AI is also massively into it. One of the new roles, right? Some of these roles did not exist 20 years ago, right? One of the most paid jobs currently is a job for AI prompt engineers. Do you know what they do? They are enabling how to, when you do a chat GPT or even Google, essentially is a prompt. You're asking a question. So how can that be made more efficient? How do you code to get the AI to respond to the prompt and give out the answer that the person is looking for? And that's one of the highest paid jobs currently in the market, which did not exist long back, right? KOLs, right? Key opinion leaders did not exist. Social media person, what? Right? Did not exist. So new roles keep coming up, and that's one of the things that will happen in fintech as well. Top skills, you'll still see technical skills are required for technical jobs, but a lot of skills are still to do with soft skills, being collaborative and cross-functional. So it's a startup environment, being cross-functional is very useful. Communication still is a key for any job, and continuous self-learning. Because with the technology curve, things are evolving very fast. So being able to learn and upgrade yourself as you are doing currently today is very important in fintech. One of the things for the younger persons in the room possibly is try seeing if you can spend a year or two in a job, even if you hate it. And if the people are okay, stay. Right? Try understanding. You got in for a reason. don't jump in blindly. Think 2-3 times before getting into a role. It plays a very important role in shaping your career. Right? There's only so many times you can keep jumping jobs or different roles, unless people who talk about, oh, this person jumped a job, the ones who've done really well have jumped in the same role to different companies as they move up, right? So I'm an engineer in Google. I've now gone as a senior engineer to Facebook, now gone as a lead engineer to Apple. These are similar roles you're jumping. Though I was in operations in Facebook, or now I'm doing engineering in Google, won't happen. Very rare, right? Very, very rare. So keep in mind that's broader. And the people evaluating you are older millennials, still baby boomers who want to see some stability. Why will I put money in you and invest in hiring, which is a very expensive process, both financially but also time consuming, if I don't see you staying with me for more than 6 months? Because I have to train you. I have to then bring somebody else. So showing that element of putting in the yards is important. But for your growth as well, there's this famous book which talks about putting in 10,000 hours to become a master at something, right? But 10,000 hours is a long time if you're working 8 hours a day, 160 hours a month, right? 2,000 hours a year, roughly, if you do 8 hours. So then that means 5 years. So if you want to get decently proficient, at least you need to put in a couple of years, right? You may not master it, but you can be good at it. This is just my career progression, which has changed significantly. I was a trader for 9 years in a company called Futures First. That was my screen on the top left. I'm fatter than I was then, but the number of screens I have now is only one. If you look at Apple's latest product, and you're talking about the augmented reality product, there's something that was developed a few years back, which is a Citibank and MIT collaboration, where you could actually see multiple screens at the same time. So I may not need 7 screens that I had at that time. I can just use one variable and I can trade using gestures, right? And I can pull in data and stuff. But that's changed. I moved from there, did my MBA with HKU, London Business School. I then co-founded the FinTech Association with a bunch of people on the right, going on to lead the association. And I've explored and participated in a variety of different entrepreneurship and ecosystem elements, including working with the UN Digital Task Force on Entrepreneurship, UNSCAP, and then setting up another community organization similar to this called India Tech Hong Kong, which we launched in 2018, where we wanted to promote technology entrepreneurs and those in the ecosystem from India in Hong Kong and trying to bridge the two ecosystems, right? That's me. I know I've gone past time. Apologies for that, Dahal. But please feel free to ask questions. We have time for questions. We have? Okay. I'm open to any type of, any questions you want. You can ask me anything except for asking me about what diet I have, right? But yeah, anything else I'm more open than. Please feel free. Yeah. No questions are bad questions. Just feel free. Or you have a point you disagree, you want to make, go for it. Yeah. Yeah, I can imagine. I've kept you away from food as well. Yeah. Yes, please. Yeah.
In your current company, you are investing, not investing, but enabling fintech companies, right? So,
Correct. Yeah.
What kind of, how do you choose what companies to, how, like, what is the
Sure. So FinStep Asia does one of 3 things. One is we do venture building, which is where we support and fintech companies in their growth prospects. Second is we do a lot of research, both on fintech and Web3 from government organizations to startups. And third is we do events, which are digital events focused in the same field, broader consulting as well. When it comes to venture building, I think when we are looking at companies, we are largely looking at companies which are in the B2B world. I believe that's a stronger progress that's going to happen, just business to business companies. And we're looking at companies that are looking to scale, right? They're looking to move to the next step and where we can have impact. We're bringing in mentors from across different fields in fintech so we can accelerate their growth and can also be viable. The key thing for me is how strong the founders are, how dedicated and passionate they are about the product that they're developing, and what is the feasibility of that in the market, right? Not necessarily looking at high growth startups, just looking at startups that will grow and are fulfilling a need. Many times I've noticed in fintech and broadly in technology, people build a product and then try to find a use case, right? Which doesn't necessarily work all the time. I mean, a lot of people build Steve Jobs and say they don't know what they want till you give them the thing. That is great if it's once in a generational product, right? Doesn't work for everything, especially in B2B. So knowing what your market wants and being able to build towards it is important. Secondly is, again, being from the industry is useful, I feel, in the fintech world, where you understand the problems if you're from inside rather than outside in. It's a bit like, say, somebody from outside is trying to talk about a restaurant and say, oh, the restaurant's not doing too well because their menu is too varied or whatever, right? Or it's the same menu every time. And they've never been in the industry. They start building a menu which is very useful, blah, blah, blah. But it may just be the case the restaurant is serving a certain clientele who come regularly, and that works. And that's why it's the way it is, right? It happened in banking where fintechs would develop solutions and say, oh, you can do this, you can do this, you can do this, why aren't you doing this? But the reality is the regulations restrict the banks from doing it. So they can't do certain things. Like digital KYC was not allowed till about 4-5 years ago. So even if it could be done, the banks could not do it because the regulator is not allowing you to do it. So you could build a solution, but if they're not able to execute, then you can't. And you spend so much time doing it. So validation, some of the companies do really well is constantly going into the market and validating. This has changed in recent world because people feel you're sitting in a laptop with people, just build a product, go ahead, ask some technology people how the product is, but not going to the end users, right? That I feel is a very big part of the entrepreneurs we are looking at as well. Yeah. Yes, please. Yeah.
My question is generally about entrepreneurship.
Sure.
We see Hong Kong's macro ecosystem is generally not on the best as it has been over the decades. And
Sure.
Hong Kong is not sustained that was 10 years ago, 20 years ago.
Mm.
And you being interacting with probably like a lot of stakeholders, a lot of people are moving out of Hong Kong, a lot of businesses are moving out of Hong Kong, but there's always an opportunity, right? Having the insights into the market, what you see is probably opportunities for like ethnically diverse communities, considering we do lack probably network, language skills, and also capital.
Right. So the way I see it is Hong Kong is going through structural fundamental change, right? What that means is the market is changing. And a classic example of that is a company known as Li & Fung. Li & Fung. Li and Fung, right? Those of you who don't know, at one stage we're worth $20 billion. Okay? Li & Fung, they're large, so Circle K and a few others are all owned by Li & Fung. Their core business was being intermediaries between factories, especially textiles, in China to the rest of the world. Right? So it was an intermediary business, which is what Hong Kong did. And that was, as I said, one of the key elements. But once the access to mainland China increased and became more easy, people could go straight, right? I see ads on Instagram or accounts in Instagram from mainland Chinese businesses are selling to the world now, right? And supply chains have improved, everything is improved, right? And trust, etc., all changed. Earlier it was like, I don't know what this is. It was same with India for many years where people were like, I don't understand this market, I don't know anybody, how do I trust this? I need a trusted intermediary in an established market, which is Hong Kong. Now it's changed. So Hong Kong fundamentally has to change business models, right? And yes, language skills are going to be important in this market. I wouldn't discount that, but it's an element of, I also believe language skills in mainland China in terms of English has improved significantly, right? So it's a question of if you're doing business and you're doing entrepreneurship, it is being able to understand culturally the needs of businesses in mainland China, how they conduct business, right? Understanding that. Having people in your team, if you can't speak the language, having people in your team who can speak the language is an element, right? So we often think about ourselves as heads of businesses. There are many heads of businesses in Hong Kong who don't speak Putonghua. There are a lot of Cantonese, local Guangdonghua people who don't speak fluent Putonghua, right? Forget ethnically minority people such as us. So I think there's that opportunity, understanding culturally what's needed. And because you're here, you know the market a lot more than people who are outside. There's still a huge value in mainland China, which people can't tap into. There's still a lot of value in Hong Kong, which people can't tap into. It's all perception. Being able to clear that perception, being able to communicate to people about, hey, this is what Hong Kong does. This is still there as a value, right? It's still among the largest hubs in the world. Yes, it's changed and servicing mainland China mainly, but that's a $12 trillion economy, right? Just imagine that, right? That's bigger than all of Southeast Asia and India combined as an economy, right? Forget population. So you have that target in that sense, but I do believe the key element is to be able to understand cultural needs of businesses in mainland. Secondly is finding markets that are not are very open to the Chinese and Hong Kong ecosystem, who are still partners, like in Latin America, Latin Africa, parts of Europe are still very strong partners with mainland China, right? Southeast Asia, all of these are still big markets. And we are, and humbly saying this, we're still building smaller businesses and we're looking to scale. And there is a big enough, very large market that you can target if you can focus on one or two segments and do it well, right? And there is still, like, for a lot of people, Hong Kong is still Hong Kong. Right? It's still, that's not going to change. Structurally, things may change, but that's just part of different markets that evolve. We all talk about Tokyo as a massive place. Tokyo is the largest financial center in Asia. It's bigger than Shanghai and Hong Kong, right? But it serves the Japanese market, right? Shanghai serves the Chinese market. So Hong Kong is going to serve a growing market. So the similar story with a lot of centers outside, right? Does Mumbai serve anything else other than India? Largely India, right? So, but that's a growth market and it's growing. So the same thing is going to happen here. The growth rates aren't going to be 8-9% necessarily in China, but even at 6% growth, we're talking about $600 billion of GDP growth in China annually, right? Which is more than US and Europe combined at this stage. So I would say that's one key element. Our technology skills are something that are still largely language agnostic. If you are looking to study technology or get into technology roles, I do see an increase in number of, I think, minority people coming into Hong Kong who are involved in the technology world and even with startups, right? Capital-wise, I don't see that as that much of a challenge. It's still, at the end, when you're trying to get capital, what's the most important thing the investor is looking for? Returns, right? It's like, okay, idea, yes, but it's like, can this idea be executed? What's the returns I can get? You could not, I was in Dubai for a year and a half, right? I was working with the regulator. I stayed in Dubai for a year. You hear a lot of people saying, oh, there's so much shake money coming in, they're just throwing money. That's not the case. And it's not like, oh, only Westerners are getting money. It wasn't the case. I used to meet people who came with family offices and the person, the entrepreneur cannot speak English. So he's brought in a translator who can speak English, and that entrepreneur cannot speak Arabic either. He speaks only his native language. And that, but the investor is invested in him because he believes there's returns available, right? So at the end, if you can show capital being put to work, which will give good returns in a strong way without having high risk, people are receptive to it. I don't think too many people are looking at what your ethnicity is per se, still. And it's just been the case here because a lot of ethnic minority businesses in Hong Kong have done well and continue to do well as well. Yeah. Anyways.
Any questions?
Yes, please. Yeah.
So a lot of venture capital firms, they invest in fintech companies. Right?
Sure.
They invest money, but they also provide a lot of value-add services.
Yes.
Does FinTech Asia or other players in this space, do you compete or have conflict of interest when you're all working together, or is it more of a...
I don't know if you can call it conflict of interest. I mean, conflict of interest comes in when, if two people are competing and then you're eating into each other, or the benefit is unethical, right? As FinStep Asia, we don't directly invest in companies. We work with investors who want to get into venture capital and directly invest in the companies. What happens when the add-on service that you're talking about is a model that a lot of venture capital investors are using today, because they realize that the startups they invest in also need support and advice. And because these venture capital firms invest so much time understanding the business and have the connection network, they can provide that as a value add. And when they work with companies like FinTech Asia, it's about what value add can be brought in and can be shared among the ecosystem. One of the things I used to love about Hong Kong fintech and startup broadly in the 2015 to 2018 era was there used to be a lot of sharing among entrepreneurs. I used to know big entrepreneurs who used to share how they're building, their failures in particular, right? Their successes, get inputs from people. And I think that's an important element that's gone away. And communities like this is the most important thing, right? Being able to share your lessons. It's not like somebody's going to steal your idea. You don't have to share your IP, as they say, right? But talking about businesses growing is healthy. You may actually get inputs from others. And if you work collaboratively, you can grow bigger, especially if you're a smaller percentage of a larger market, right? And that is something that has done well globally. It's this question that a lot of people used to ask, right? Why are all the jewelers in one place? Why are all the spice? Why are all the vegetable sellers all next to each other with the prices being transparent? Because people are all coming together, right? One target area. In a similar way, if you're able to work together with others and growing the type of market in the field you are in, a lot of payment players come together to collaborate on regulations, to collaborate on standards, right? So that broadly things can be easier for their users. So collaboration, I think, is very important, which gets overlooked because sometimes people feel it's competition and we should not. But I do believe that's down to the founder then, right? Which is very important. You're right. If there are too many cooks, then you as a founder have not done your job. It's like being a manager, right? If you have a team of 10 people, if you ask everyone for their opinion all the time, you will have 10 different opinions, maybe 4 broader streams, and you can't decide. And every time you decide, everybody's feeling bad. So you got to find the right people. So if you're talking about finance, you want to ask the finance people from the team. If you're talking about design, you talk to the design people in the team. Same thing with your advisors is finding the advisor for the right thing. If you ask a finance guy to tell you about UI UX, which is graphics or interface, the value you're going to get is not going to be high, but you're going to end up being confused. So narrowing down your focus, I think, is important in that sense. Yeah.
Sorry, I'm asking too many
No, feel free. It's as long as they have time, I'm okay with it.
board rights.
Sorry?
A lot of VCs get board rights when they are investing in companies. Would you also have that?
We don't, as you said, we don't invest directly, so we don't get it. But yes, so what she's talking about is when companies, venture capitalists, which are investors who invest in startups, when they invest money, they get board rights, which is getting a seat in the board, right? But it depends on the number of board members you want to have and the scale of investment that people put in. So we don't necessarily always look at it. It's the investors who may want to look at board rights. In some cases, maybe not. The size of what we invest, our investors invest probably 3 to 6% of the company's stock, which is not significant necessary to have a board seat. Yeah. No worries. Thanks. Yes? Yes, Dal, please. Sure. I think what we are all talking about in terms of artificial intelligence, as I mentioned, Millennial Capital and others have been using it for 30 years, 40 years now in trading and financial services. Alibaba, as an example, a lot of the Chinese firms have used AI extensively. Right, a lot of these offers you get on your phones, your Instagrams, etc., is data mining, right, and tailoring and saying this is what you need, this is your requirement, to make it faster in some senses as well. What I see happening now is the focus has been on large language models, right? So ChatGPT as such is about converting large amount of data and developing neural networks for the AI to be more responsive to your immediate needs, right? So almost human-like interaction is the focus. In financial services, what that leads to is, I think there's be a significant amount of impact on customer service elements of financial services and fintech. Secondly is it may actually help with better risk management and looking at how you can enable better customized products as well. You go through technology cycles, and it's important that we go through technology cycles. Is what happens when you have a huge amount of investment going into certain things, at that stage, more people can use it, which then makes it more affordable, right? So instead of few companies using it, you have a lot of people using it. You could say when the iPhone came out, it was at 700, 800 USD. It still is in the 1000 USD market. But now you can buy smartphones for 100, 200 USD as well, right? Very comfortably, in fact. So that kind of tells you that once the technology is out there, it'll become more prevalent. So more people will use models that the bigger companies are using because it's becoming more affordable. That's for me is the key element. There are also risks though. I think legal implications of AI are still being looked at. Governance of AI. If an AI goes rogue, right, who's responsible? So deviating a little bit, but it's an important element. There was a company known as Knight Capital in 15, 20 years ago. They used to use algorithms for their trading, right? So they were upgrading the software essentially on 6 different servers overnight. It was done. Next day when the market opened, the algorithm went crazy and it was buying and selling, buying up, selling down, and the company lost hundreds of millions of dollars, and there's a huge market impact. What they figured out was, after doing analysis, that when they did the software upgrade, of the 6 servers, 5 servers it was done properly. On the 6th server, it wasn't done properly. So the code had an error, and then it went bad. So being able to know where the error comes from, how do you manage the technology risk is important. Another example is Air Canada. Some people have seen this. Air Canada's chatbot approved a refund for a customer because of some error, and the chatbot said, yes, you will get your refund, send us your details. Afterwards, Air Canada said, no, the chatbot did this, we're not giving you the refund. Like it was a chatbot error. Right? It's like saying, I went to the bank, my employee did not know it, so it made an error. The court ruled in the favor of the customer, but there are these challenges that will come in where when you have intuitive AI answering questions, which is not prescriptive answers as a chatbot, then there will be errors that may come in, may give misinformation. A lot of chat GPT is not accurate as well. Right? And we've seen the recent things with Gemini AI bringing in images that are not relevant, right? So verification, validation becomes very challenging. So I think that's going to be a massive, massive story, which may slow down the growth, is governments are going to come in. Europe has come in with a new AI law, but regulations and governance is going to be pretty massive for the industry. Yeah. Yes, please. Yeah.
Hi, Syed. I'm Nirmal, and obviously thank you for your insights today.
Thank you.
My question might be a little bit longer, so I'll take my time here. For the last 4 years, I've been running a startup and especially focused on educating the ethnic minorities about why it's important to invest in the stock market.
Okay.
My main point is that, obviously as a trader, you can make massive returns when you do it by yourself, right? But what I found is that the community in general, they always like to stick to the same thing, like banks or like insurance agent, and where they put a lot of money, but they only get 10% a year or so. And I come into the market saying, hey, there's a better way to do so. And for the last 2 years, we've been doing digital content production and educating the community as well. My question to you is, as an entrepreneur, if you were me, what would you do different so that you can convert larger community to your students and you can make a greater impact on the way?
Great question, right? And I'll answer it in this way, right? A lot of South Asian food, Indian, Nepali, Pakistani, Bangladeshi, is spicy, right? Generally speaking, right? What's a good momo without good chili sauce, right? So you could call a local Hong Kong person or somebody from the West doesn't like spice and say, the taste of this lies in that chili sauce. That's how you get the experience. They're saying, no, Baba, I just want the steamed momo with a little bit of spice on the side. You can give them the health benefits, the joy of the spice and how lovely it is, how it was made to be that way. They'll still say, no, Baba, I want it that way. Right? What I'm trying to say is customers and persons have an inherent inertia, but also taste. And that doesn't change. Like our daily dal chawal is not going to change significantly. We're not going to have biryani every day, right? As much as I would love to, probably too much of it. But it is an element of saying that if that is the market, if you're looking for, are people are willing to take and try out, and hey, I don't mind trying out because I can get the flavor, then you got to go to that market. You're going to the market that does not like the chili sauce. as an example, right? And that's where you can try as much as you will. Some of them will say, okay, you've told me so much, I'll try it out. But inherently afterwards, and I go back and I mean, next time I'm going to try it, right? So it's about, can I bring people into a world where you have to see from a customer side. A lot of design and UX is done by the designer. How can I use, this chair, how can I sit on this nicely, right? Okay, I'm 80 kg, 70 kgs, okay, I can sit on this. What about a bigger person who comes like me and is like, it's not meant for me, now I can't use it, right? Beautifully designed, but maybe not for me. Shorter, taller, all of this, right? Aesthetics. So designing from the customer's point of view is important, or going to the customer that is your target. Rather, changing customer behavior is significantly difficult, unless there's almost a life-changing event, which is what COVID was. And that's why that example you see, there's a jump. It's because it's life-changing. It had to be done. I won't try out high-risk investment unless, when do people go in for higher risk? There are 2 times they usually do that. What are the 2 main things?
When there is a certainty to make new digits, they obviously take time.
Okay.
The grid comes into place.
Okay. I think there are 2 reasons when people take higher risk. 2 instances in life. One, when you're desperate and you don't have anything, you're gambling, right? You're like, I have 10, I need 1,000, I'm going to put in, screw it, this seems higher return, right? Because you need it, you're desperate for it. The second time is when you have a lot, okay, 5% of this doesn't hurt me. So you got to find that. Ideally, don't find the desperate people because they won't last, right? That's philosophy. Like, just generally, they're not at the right place mentally. You want customers who will come back, right? If they're desperate all the time, then you're struggling, right? And you'll get hurt very badly. Customers who can have their alternative, who say, I don't mind putting 5%. Those are the type that you may want to target. So you got to change the audience you're targeting, and others, you got to you got to try to find in their world what can you help. You got to make them understand portfolio theory, right? As an diversified portfolio theory, why 80-20 or 90-10, right? And in current investment environment, a lot of people are scared. Property values are down 20-30%. So real wealth has been destroyed. So I want to take more risk when I don't have money. I want to just beat inflation. That's what people are looking at right now. So you got to go and talk about why alternatives work, what are the right reasons, rather than your viewpoint. And if you want to share how you've done that, is useful. Are you investing on your own?
Yeah.
Okay. That may be useful to see the movie Dumb Money, you'll get an understanding of how the broader market understands.
Which movie?
So a movie called Dumb Money, D-U-M-B, Money. The GameStop story. It's on Netflix now. It tells you a lot about psychology. It doesn't always work, but it talks a lot about social trading and group theory. Yeah. Thanks. Thanks, sir. Thank you.
Thank you, Mr. Ahmed, for sharing your valuable insights. A lot of data were being shared, and I think it's certainly some of the data were really eye-opening for me. And I think there's a lot of takeaway from this session that you can go back and reflect. And you shared a lot about fintech, a lot of tech stuff, data. But since you have shared a lot of valuable insight, I'd like to take you back. We're going to engage on barter activity right now.
Sure.
Since you shared some information, so I'd like to invite our chairman, president of FINYE. So in exchange of your time and valuable information, we'd like to share some token. And it's not a virtual token, by the way. It's an actual token of love. And I would like to also, on behalf of FINYE, thank the venue sponsor, The Nest. Please give a huge round of applause for providing us with such a beautiful space. And they are also our corporate members. So if you are a FINYE member, please, you can stay and enjoy the lunch for 10% discount. And I'd also like to thank, on behalf of FINYE, our coffee sponsor, Susum Fund Management, Visodai. Coffee and cookies are from Susum Fund Management. So if you are into crypto investment, please do reach out to him. So by saying that, I think we're gonna wrap up. So please feel free to stay here for lunch or for the networking. And also, yeah, let's not forget to take a group picture. And we'll also be organizing next coffee talk every last Sunday of every month. So, yeah, please do follow our social accounts to stay updated. So, by saying that, I hope all. Yeah, so please feel free to network and have a beautiful day ahead. Yeah, thank you so much.